We're going to talk about measuring and reporting project health with key performance indicators. And really that's a really long title for what are the key measures that you're looking for to keep a project on track. And a lot of that has to do with the management of budgets. So I'm going to focus on budget management and different types of budgets to focus and manage on. And then the next two webinars that we have for this month that are product specific, our OpenAir webinar is going to focus on the features of the system to support project budgets management, and the FinancialForce one will do the same, the project budget management features. So that is my spoiler alert for the next slide, which is the upcoming items for us. We also have an OpenAir user group for those of you who are OpenAir customers in the DC area. Our friends at Delta Risk are offering their location in Arlington to host it, which is going to be Friday, September 22nd. And next month we are actually off to Las Vegas again. So we will be at TSW conference. We've just happened to be at 3 conferences in Las Vegas this year, but this is the last one. So if you happen to be there, we'd love to see you and have you stop by our booth. Well, let's really get into the guts of what we're going to talk about today. So I'm really going to talk about budgets coming in from two different views, which is money and hours management in systems, and using those as sort of objective measures. Now, the trick with project management, I believe, is there's really that project manager intuition, that skill of anticipating something's going to go wrong, and that's the whole risk and issue management part of project management. But there's also the objective part, which is if you have 10 hours, are we going to go over budget? If you have $100, are we going to go over budget? And so that's what I'm going to focus this webinar on specifically, and therefore the definition of the objective tracking is from a money perspective and from an hours or days perspective. And really the money is of course related to how much funding do you have to deliver this, and also the cost factors of it. So are you managing to some kind of margin or profitability target when you do budget management? From an hours perspective, this is more the effort, and there's the approach of managing to a budget of hours, and then there's the approach of managing to more effective estimation in future SOWs. So there's really, you serve both purposes with one metric in the measurements of a project manager. So I'm going to start with the money approach, and I like to look at things like, what is the bare minimum? Okay, the bare minimum is don't manage anything, which of course is not really project management. What's the bare minimum is how much money is this project worth, and how much have we billed against that budget? So just total funding is the way I look at it, the very basic. And I like to look at ways to manage things from what's the bare minimum to how can you splice and dice things in different ways so that you get a lot of different measurement results or analysis options with the data. And so this basic to advanced, and advanced is a loose term, but it's really starting off with, can I manage budgets from a money perspective, a funding perspective in a total amount, or can I break it down into more detail, and the more detailed breakdown, can your PSA system also handle and support that breakdown so that you can capture actual cost against the actual money against the budgets in those granular ways and be able to understand where you're at from a burn perspective. So I look at it as like 3 different money breakdowns, total funding, then a breakdown by category. And category is really different for every company, but category tends to be things like labor or expenses or material purchases. So those are high-level funding elements that some customers will actually call out on their customer purchase orders with line items of where the funding has to be allocated. And then an even more detailed item is being able to break that budget down not only by a category like total funding of $15,000 for travel, but be able to actually plan that budget out over a timeline. So I expect to burn $2,500 a month for 4 months, and therefore I get $10,000, so I should be under budget for a $15,000 expense category. So those are just approaches I think of when I'm thinking of best practices and how to manage budgets and manage projects from that money perspective. Now if I look at each one of these levels, so project level budgets, and that's more like total funding. This is really the most basic budget management. It's really you're capturing the total amount. I call this reactive budget management only because you're really managing to a single number. And as actuals are coming in, you're checking against how you're doing against that actual number. So the reporting is a little bit limited, I think, in this area. You would have just total amount versus what you've invoiced, what you recognize, but you're not sure where the money's going. It may be for expenses, it may be for labor, it may be for pass-through, it may be for hosting or subscription or software or something like that. So you can definitely, you have to have another level of understanding, which may be something you do manually on spreadsheets somewhere, but if you don't have your PSA configured to support it, this basic level really won't give you very much other than how much money have you spent. The best you could do probably with this level of budget management is be able to do some kind of forecasting against the burn of the money and be able to understand if you're going to go over budget, but you still won't have any details about, are you over budget in a place where there's, open budget to be burned like expense budgets versus labor budgets. So of course that leads to the natural next step, which is doing budget management at a category level or an account level. So things like expenses, labor, or different types of labor. If you have project management consulting versus technical consulting versus managed services, those are all different categories that companies will track. So obviously the income accounts are one aspect of tracking to that level of category. The other is really just wanting to have that insight into more information at your fingertips to do the analysis of the money in the system. And really breaking it down in this category, it does support a lower level of management for project managers, because now you're measuring burn by category. You have a budget for labor, and there's a time factor in there or cost factor in there, so you're able to sort of manage that from a resource scheduling perspective versus expenses, which may be more pass-through and fluctuate based on the time that you book the flight, how expensive it is, things like that. So breaking it down at the budget level, you still have your standard budget, invoice, and recognize type reporting, but now you can break it down to that lower level and check and see how you're doing against the components of the project, against the categories of the project. And of course the forecast option is still there. Now the most detailed one is taking that category and bringing it down into one more level of detail, which is how much do you expect to burn each month? Now this is a typical forecast type thing. This is typically what project managers would do to say, okay, I know this is more anticipating how much I'm going to burn, so the scheduling aspect of the work. So the previous two examples, yes, you could still schedule them out across the timeline, but what some companies will do is they'll just say you've got $10,000 managed to that. Right? But the management piece of it is really across the timeline, because the timeline is the delivery of the project. So really if you can get to this level for budget management and planning out your budget burn across the timeline by category, that gives you a lot of data points to understand whether you're burning hot, burning cold, you're going to go over budget, your billing, you're going to have to consider write-offs or credits or anything like that based on managing the project as it's burning from a financial perspective. And that's where your forecast is also going to be very key. Now, the other side of this is not just the money that you expect to earn, so the funding amount that you're getting, and then how much you're invoicing, how much you're recognizing according to your rev policies, and seeing how you're eating in against that funding from the customer. The other aspect of it is a cost measure. Okay, the cost measure is what complements that total funding aspect to give you that profitability. And some companies out there hold project managers accountable to maintaining the margin. It's not necessarily a utilization for them, it's a margin percentage that they have to hit. And so they have some control over their costs based on making sure that they're picking the right resources and not using subcontractors that are expensive and things like that. So if you need to do any kind of margin reporting, of course you're going to need cost. Now, cost for expenses is very simple. It's whatever the cost of the expense was, and that then of course becomes a pass-through. materials or product costs, those are actuals that you're putting into the systems that you're supporting. But the hourly cost is where things get tricky. The cost of a user in the system. And you tend to think in terms of payroll plus benefits plus maybe overhead things like management factored in and facilities and equipment and things like that. So the hourly cost is something that becomes an item that the finance team has to noodle on a bit to figure out what's going to be the most accurate cost for us to be able to allocate to a user some kind of factor above their salary. And that cost would be something that would then contribute to the total cost of that user working on a specific project. Okay. Now, that all sounds nice, well, and good, and everyone's sitting there, yes, of course, we have the hourly cost then rolls up, but now you also have to consider if you want accurate measures for profitability and be able to hold project managers accountable to profitability and margin, is being able to consider the fact that if your consultants work more or less than a full work week, so a 40-hour work week, they're on salary, for example, they get paid 40 hours a week, but they're not hourly people, so their salary is unwavering no matter how many hours they work. You may have to actually consider implementing some kind of cost adjustment process to align those hourly cost values to support a more accurate profitability reporting. So it's not just a matter of, oh, these 60 hours cost this much. These 60 hours actually cost the same as 40 hours for a salary person because that's what they're getting paid. So you have to adjust those hourly costs in the system. So your PSA tool that you're using, if you want to hold project managers accountable to margin, you want to measure margin as one of your key metrics because you're doing like a revenue plan or a funding plan, and you're forecasting where you're going to be at with the funding plan, you definitely have to consider this cost adjustment approach. And the cost adjustment approach would give you the most accurate way to measure margin and understand where you may have to make adjustments, resource swaps, things like that for the project health. Now, the other aspect of the management is the hours piece of it. So almost all project managers are dealing with hours. Maybe not all project managers are dealing with the money side of it. So there really is a decision on, do you hold project managers accountable to both or one or the other? But I quite often see project managers being held accountable to hours because hours is effort that was expected to be burned. And if you have to sacrifice and bring in a subcontractor that's high cost, then maybe there's an understanding that it's going to hit the margin, but the hours are really what you want to maintain because that proves out that your estimation process as part of your proposal or your SOW is good. But the hours also have different levels, and I think they have more dimensions because there's really sort of how do the hours roll up, how do the hours group together. And there's a basic level just like there was in the budget piece of it, the money piece of it, which is how many hours does it take to deliver this whole project, period. Okay. And then from there you break it down based on logical delineations of the project. So things like the task level, like how many hours per task are needed to complete each activity. Or maybe I have 5 people working on a single task. How many hours does each person get to deliver that activity on a project? So these are all different, like a little more granular, a little more granular, a little more granular. And then there's also the act of using baselines or original hour plans to be able to compare what did we originally think this was going to deliver at, where did we end up, so that you could always do that post-project analysis and figure out where improvements could have been made, where things were impacted by issues or bad estimates, where you could feed that back into the next review cycle. So at a project level, this is the most basic hours budget management that I can think of, other than not managing anything at all. And I consider this more of a reactive budget management because you're really looking at, okay, if you have a project and you say it's 40 hours and as the time is coming in on your timesheets, you're checking against that to see how many more hours do I have left. And at that point, you have to use project management skills to say, how many more hours am I going to need, right? Like how many more hours based on the work that's being completed will I need to actually complete this work? And this is where we get into hours remaining, which I think actually works better on some of the other approaches in the next couple of slides than at this high level of a project. But because you're making the project manager do a lot of work here. Very high level, 100 hours budget, I've got 10 in. Can I finish everything in the 90 hours? They're having to ask that question versus having anything that's more predictive or proactive in the system. But if you have at least scheduled out the work over a period of time, you schedule out the hours that you expect to deliver the project, you could use that as an initial plan to say, of the schedule of hours that I have planned out, I'm going to compare that to the budget. Have I already scheduled over budget? Am I already planning to go over budget? That's one measure that you can do. The other measure is, of course, the time, like I mentioned, in checking out where you are as far as burning the budget. And really, a third measure that combines not just the budget, but the schedule and the worked hours together. So what did you schedule and how many hours have you worked, so that you understand if you're burning ahead of plan or behind plan. I call it hot and cold burn, because that way you'll know if you need to adjust your schedule and understand if you're going to go over budget. So these are like 3 different measures using the budget as well as the fact that you're working and putting time in that are useful. Now at a higher project level, that's very limited on, you still have a lot of decisions about, well, if I have a lot of activities going on, I have to figure that out on my own, whether I'm going to go over budget or not. So you can save yourself some headache by actually planning down to that lower level, planning down to that activity level or task level or phase level, whatever terminology suits your organization, and break the total hours for that project down into pieces. Because then those pieces can be something that you're managing to, and you can schedule people to those pieces and understanding how many hours they're going to be spending to finish that piece of the project. With this lower level activity, it is, I think, a little bit easier to understand. I have 10 hours to finish the kickoff meeting. I've burned 2 of those hours with the slides. I've got another 8 hours. Is that enough budget to cover everyone attending the meeting? And if I need more hours, I know that I'm going to go over on this task, so can I borrow hours from some other budget on some other task? So it gives you a little bit smaller chunks of hour breakdowns to manage the project and have better insight, more detailed insight into how the project is burning and how the project is on budget. You can actually support a timeline with this view as well by scheduling people across the timeline, or maybe spreading the hours between the task itself, having a start and end date. That's sort of your plan of burn, so that you can still use your timesheet hours to match up against that schedule and see, am I burning hot or cold? But breaking things down to that task level definitely gives you more of a handle on, are things looking good, or are some pieces getting ready to go over budget, and be more proactive on the budget management. And the last is really taking it down to even a deeper level, which is, I have a kickoff meeting. I'm going to keep using that because it's a pretty simple concept. I have a kickoff meeting. The kickoff meeting I've budgeted 10 hours for. I have to invite 5 people from my team, which the kickoff meeting will last an hour. So I know I have to burn 5 hours, and then I have to prep the kickoff slides. So that's going to be another 2-3 hours. So that's going to burn quite a bit of my budget. So what you can do is you can actually give people individual budgets for that activity, and that sort of rolls up to the total of the activity. So the kickoff meeting with the 5, each person is given an hour to spend on the kickoff meeting. The project manager is given themselves 3 hours to prep for it. You roll all those hours up together. That totals up to how many hours you expect to burn for that activity. Then that activity rolls up to the project level, so everything kind of rolls up. The lower you break it down, the higher it rolls up backwards. And with that level, now you're looking at individual people and how many hours they're spending. So now you're looking at a user productivity impact on your budget and not just the activity itself. So this, I think, is one of the lower levels that I like to see project managers get down to, because now you're giving control to individuals to understand how many hours they need to complete something, and help them from a productivity or a delivery efficiency view, in addition to just normal budget management. Okay. It gives them the ability to also report back things more easily on things like hours remaining. So I haven't finished the slides yet. I need another 2 hours to finish the slides, so I need to another 2 hours to complete this activity for my part of the task. Right? So you still have your budget and worked hours, but now you can break it down by individual people, and you can sort of anticipate whether individuals are going to need more or less time to be able to manage the hours that way. And of course, the scheduling of people, you'll be able to do the scheduling versus the actuals and compare hot or burn coal as well. Now, a predictive budget management, I mentioned hours remaining in a couple of places so far as I'm talking about hours. And really, there's a plan of hours, like your original plan, that this is going to take me 10 hours. And then there's your estimate at completion metric, which is a slightly different take on the planned hours type view or budget of hours type view. What it gives you insight into is you may have been given a budget of hours at the beginning of the activity or task, but now you're also tracking what do you think it will really take to complete that activity or that task. So that's the estimate at completion, EAC metric. And many of the PSA solutions out there can track this by having individuals or the project manager supply sort of hours remaining to activities that then add those hours remaining into what's already been burned to compute an EAC. Okay? So an EAC at the start of a project, start of a task, is always the same as the budget of hours on the task. You expect it to deliver for the same amount of hours. As you continue to work on the hours or on the project, and the hours are submitted on time cards, then you basically, the hours remaining value that a PM or an individual could enter would be added to those hours already approved to give you your EAC. And that's a different metric because now you can see things like where you're going, where are you expecting this task to end up, give you more proactive viewing so that you can anticipate, maybe going and getting more funding or doing some adjustments on hours budgets across tasks, or taking a step back and looking at the margin to see if you're going over hours budgets but you're using cheaper resources, are you still okay in the organization? But as a rule of thumb, when you start going down the path of EAC, ETC, which is hours remaining, you do have to keep an eye on hours remaining. In some systems, they don't automatically keep them from not going negative, so you can't say there's negative hours remaining on a task or a project, because that's Superman going back in time. So you really have to kind of keep on top of this hours remaining approach so that the EAC is very accurate in the system. But once you have an accurate EAC, you can use it to understand the whole scoping refinement, going back over the SOWs and seeing what we should do in the future to make sure that you're covering hours and costs correctly. If there's any write-offs that you're anticipating, change orders, funding, things like that. And finally, baselining. So baselining is a tried and true project management technique that really captures both aspects of it from a money perspective, a money burn perspective, a cost anticipation perspective, as well as an hours plan perspective. So if you have a tool that can do baselining, I would recommend saving baselines and then comparing where the project ended up at the end, because that's a good metric to kind of go back and say, here was what our original plan was, here's how we actually delivered it, taking all those factors into consideration about influences or risks that became issues, or resource availability, resource costs, that kind of stuff. It gives you a lot of insight into how well the estimation processes, the proposal process, the SOW processes, as well as how good are your PMs, how good is your PM methodology, project management methodology in the organization. And the baselining is not really a health metric, it's more of a refinement of process metric, I think, and it should be done at the very beginning of the project and then used at least at the end of the project to understand sort of what happened and be able to learn from that overall. Now, which of the levels make sense for you from a budget management, from a cost tracking, from an hours tracking perspective? It really does come down to the types of projects you have, the types of project methodology you're following, how large or small are your projects. So if you had projects that typically are 40 hours for a budget, you probably would not necessarily need to go down to the user level for hours management or break things down into a lot of detail because it's a small project. But if you're managing a project that's 1,500 hours that lasts 9 months, managing that at just the highest level, total budget, total hours, you really don't have a lot of insight into where you're going. You really need to have a detailed plan, I think, to understand and anticipate when things are going to go off the rails, after month 1 or month 2, instead of waiting until month 8 and then finding out you're out of budget. So a lot of these questions are things that we'll ask when we're working with customers to kind of come up with project metric reports and configurations for the PSA tools that we deploy to understand what's going to be the best way for them to track the level of detail that's appropriate for the types of projects that you deliver in the organization. So as we wrap up here, it's really the budget management, the key metrics, I think, always come back to the money and the hours values because those are objective measures in the system, and comparing them against the original plan or baseline really gives you a lot of insight into it. I would definitely keep in mind of how this will help your PMs from a keeping on top of their projects, being able to track where they're at from a budget perspective, being able to understand from a financial health or an hours health perspective where the project is, and insight into the delivery of the project as a whole from the project managers in outside of things like risk management, issue management, status reporting type thing. If you have a PMO or are thinking about doing a PMO, this would be something that would factor in. It would also be part of your project review process, so it's something that when you define a standard operating procedures, at least checking on those procedures to see if they're still relevant year after year is a good practice, only because things change, companies change, offerings evolve, and so making sure that you have the right level of detail for the right types of projects is always a good checkpoint for organizations.